check the March Fed funds futures because we just got a two-handle on the PCE core for the year. 2.9% comes in up 0.2 on the month, rounds to 2.9. First time since before the pandemic that we have had PCE core inflation that low. PCE headline 2.6, also a 0.2 gain during the month. That's the same as the month before. Personal income comes in up 0.3 for the month. That's a little bit lower than last month. And personal spending, a strong 0.7%. The forecast was for 0.5%. So we got some real strength in personal spending. That's not really a surprise because we saw the retail sales numbers, but it does suggest that we have fairly strong services spending as well. So this will help ignite the debate again about how soon the Fed starts to cut rates.
And a big focus for Tiffany and the team over at PIMCO, and others too, is this spread that seems to be emerging between what you get out of PCE and what you get from CPI. Can you walk us through both and talk to us about what this might mean for the Fed next week?
Well, it's an interesting thing because the public tends to focus on CPI. The Fed's official target is PCE. Fed likes PCE better as a measure of overall cost changes. And there are some things in there that are different from the CPI, particularly housing, much lower weight in the PCE, and also some in the healthcare areas that comes in different ways. So you get generally about a 4 to 5 basis point spread between the two, and that has pretty much always been the case. But when the Fed says we want 2% inflation, they're talking about 2% that we're getting today with the PCE.
Bob Michael was on the program a little bit earlier. You asked us to ask him what he should ask, or what you should ask, rather. He talked about QT. Yeah. QT was the focus for him, not rate cuts. Do you think we get some clarity on that?
Not a lot, but what I think they may say is that we've begun to discuss it. They need to, because they're getting to the point now where we're getting into that gray area of where ample is ample enough in terms of reserves, and we're seeing the reverse repo sort of fade away at this point. And so they're going to have to make a change at some point, and the question is, how do they make it? Do they taper? And that's the kind of thing they're going to discuss for a couple of meetings. So if they say they've discussed it, then that puts a clock on it, and that will be interesting for the markets.